by the law in Ghana, you have to be in a category to be licensed to do business. And so for us, we're in the private equity venture capital asset class. Although we provide capital specifically for a particular segment of the economy, specifically the missing middle. And I think now it's changed. The name has changed. I think it's called something else. But providing capital anywhere from $500,000 to $2 million. The equivalent of $2 million is what we're specialized in, right? So, long story, but to cut that long story short, relocated to Ghana in 2007, joined a startup at that point because the board wanted somebody with more experience to come provide leadership for two straight out of school entrepreneurs, very bright, borderline genius, but had no industry experience. So how do you bring someone in to provide what I would call technical assistance and actually help steer the ship, right? And get them from a position of not being profitable to breaking even and to scaling, right? So that's the value I brought. So I came in as someone they couldn't afford. The board actually had them give me a whole bunch of equity. In fact, I ended up being the third largest equity holder in the business, and I led commercial strategy. So again, fast forward, I exited with about 6 times my money, right? But we went through the process of growing the business, attracting capital. We attracted capital from 2 Silicon Valley investors, 1 Pan-African fund. And by the time I left, we were the only company in West Africa, and I think still the only company that Intel, the chip manufacturer, they had a venture capital arm, had invested in, right? So very exciting success. I exited that business and decided that I was going to take all the money I cashed out to find other businesses like this and help pretty much get them to a point of scalability, and hopefully we could attract capital. But I quickly realized that the capital wasn't there, right? And so essentially we were shepherding these companies off a cliff, because if you get a company to successfully get to the point where they can scale, you're doing a number of things. One, you are actually providing validation to competition that have deep pockets to be able to say these guys can actually fulfill demand, right? And so you've provided validation. The second thing is that you've actually set the company up to fail, because now they no longer have the capital to pretty much sustain the growth needed to meet increasing demand, right? So we went from a position of, okay, capacity building to saying, look, it may be a drop in the ocean, but if we came up with a fund, at least there's some companies that can benefit from this. Once they got to the point where they can scale, the capital will be available. So that was really the genesis of this whole journey that I'm on. I would say that the whole private equity, venture capital space, most importantly from the LP side, and I may get into trouble for saying this, is I see it as a very close group, right? And what we realized very quickly is if you didn't have prior private equity experience, pretty much the door was shut. But we felt that for the type of investments we're making in our markets, it required operators, right? Because you're not essentially going in there and putting money into a business like you're putting money into the public market and going to bed, hoping that the management team is matured enough to deliver on your expectations. You actually have to roll up your sleeves, get your hands dirty, right? And we found out that being a first-time fund manager, first-time team as well, it was a challenge. It was an uphill battle. So for us, it was really now trying to figure out how, because we are entrepreneurs at the core, how do we overcome that barrier? And so we were very excited when we found out there were organizations such as Capria, maybe I shouldn't be dropping names, but organizations that really were out there to help first-time fund managers because they understood, or at least purported to understood, the challenges that first-time fund managers go through. And so they will offer things like warehouse facilities, technical assistance, and get you to the point where now you could hit the road and be successful attracting capital from the DFIs. Unfortunately, that didn't work for us too well. We engaged, almost everyone out there, and each of them, there were different reasons why we didn't either go forward with them or pretty much we didn't make the cut, right? So maybe they have a selection criteria that is not publicly published, because there are others who were able to attract the support from them. And this is a running joke. I met one of the CEOs of one of these entities at a conference, and interesting enough, we just happened to be in an elevator, and I got a bit mischievous and decided to take a shot at her, right? Because they have a tall list of first-time fund managers that they've supported, who still haven't raised any capital, still haven't gone to first close, right? And I said, oh, you guys actually turned me down when I applied, right? And guess what? I've hit first close and about to get to second close. And she goes, wow. Then I think our selection criteria is wrong. I'm like, I don't know. But yes, I think there's a selection criteria, and maybe we just didn't make the cut. So yeah, that's what it is. But in other instances, I think that there were issues of trying to solve a problem that maybe they didn't really have a handle on. So I'll give you a case in point. We've been having conversations with one such catalytic provider, and the conversation was around hedging on the currency, right? How do you, knowing that your country has a history of what do you call erosion of the currency against the dollar, how do we help you deal with that? And so part of the technical assistance that we were going to get as part of their investment was to help us address that very problem. Now, come 2022, Ghana suffered one of its worst economic crisis, right? Where the currency, essentially the cedi went from 6 cedis to the dollar to about 15 cedis to the dollar within a span of like 6-7 months. All of a sudden, that provider that was supposed to bring us the technical assistance to help us deal with this very issue tells us, unfortunately, you're no longer attractive, and we can't. And they were actually taking us to IC, that's the investment committee, before this crisis happened. And once the crisis happened, they pretty much won. Not only did they not even tell us, they stopped taking our calls. It wasn't until we got to AFCA and bumped into someone who used to work there, the lady who was working on our account, that she told us, well, I left the company and I was actually instructed not to reach out to anyone I was talking to. I'm like, that's weird. Anyway.
And they were the ones who were supposed to help with hedging.
Exactly. So I think that, again, they came across as being more commercial than being catalytic in the long run, right? And so again, for me, if these conversations are being had and we know that, look, it's not a facade, it's really, look, we're more commercial than impact focused, I think that would help the likes of us, right, approaching them. You're starting out with these catalytic guys, right, and they have their thesis, and so it requires alignment. And so you're finding that for our case, right, we spent 3-4 years trying to align with all of these guys. And the problem with that is, if you're not careful, it may lead to mission drift. If you're not careful also, what it does is that it then starts to alienate commercial investors who may want to come in. And then the third thing is you end up layering risk, right? And so each one is asking for a certain concession, right? When it comes to your thesis, right? You need to be deliberate about this. You need to be deliberate about this. Now, you are in an environment where deal flow in itself may not be that great. And so the more you continue to add on these restrictions or concessions, you are actually getting to a point where you're thinning your pipeline, right? In a market where the deal flow may not be that great anyway, right? And so then commercial investors are looking in and saying, I'm not sure I want to do this, right? Okay, so that's one thing. And so for us, it was really a journey of, I don't want to say futility, because I think that every journey you go down on, you're learning something. So it was, for us, lessons learned, and we had to make a conscious decision at that point to say that, you know what, enough is enough. We're not going to deal with these guys. We're going to figure out how we unlock capital for ourselves, and that for us is where the journey with the pension funds started. We approach it more from an ecosystem development standpoint, because we realized a number of things. We had to get the regulator to understand what we do. And for us, instead of bashing the regulator, it's really, guys, we want to work with you to understand the asset class. That's one. Two, we had to get the pension funds involved. And the pension funds in Ghana and I'm sure in other African countries are more complex than you think. It's not just about the fund manager managing the fund, but they are accountable to trustees who are custodians of the fund. Those trustees, unfortunately, are also accountable to usually underlying schemes. So I'll give you an example, right? So there's a scheme that pretty much is responsible for mobilizing pension contributions from all the teachers in the country. Now, what that means is that that scheme is going to have some board or governing committee, right? Unfortunately, typically it will be made up of teachers who may have limited understanding when it comes to the asset class. Then you have, they pretty much hold the trustees accountable. The trustees have their own board, and that board may be made up of individuals who may not have understanding of the asset class. Then you have the fund managers who are asset managers, but what people don't realize is that our asset class is a totally different ballgame. So they may have limited understanding, but they may be the ones who come close in terms of understanding what they do, what we do. But that also still requires a bit of education. But there's also the issue of interests, because that fund manager is looking and saying, okay, well, I need to share management fees with these guys. Okay. Secondly, the way the Pension Act is set up, it means that the trustees, based on pressure from the underlying schemes, can yank an account from a fund manager if they feel the fund is not performing. So what that meant is that you had pension fund managers who were unwilling, right, to take that risk, and nobody wanted to be first, because from a reporting standpoint, if I do fixed income, I can show these guys on a regular basis the appreciation in their money. If I do private equity, I'm going to deal with a J curve. And I'm going to be the only one showing this dip, whereas all my contemporaries are showing steady increase, right? So we had to have conversations, right? And we realized very quickly it couldn't work if it's just one private equity or venture capital fund manager engaging. So we had to create the Ghana Venture Capital and Private Equity Association as an industry body to start engaging on our behalf, right? So that's one thing that we did. Also, Impact Investing Ghana is another vehicle that we created to figure out how we could also, on our own, in addition to engaging the pension funds, start to think about how we create our own fund of funds to address the capital gap in the market. So we took an ecosystem approach where some of us actually were actively involved in birthing and sustaining some of these vehicles for a while. But on our own, as Mirepa, we also did quite a bit of relationship building with the pension fund managers to really get them to understand what we were doing, and then also to get them to obviously appreciate the risk, but eventually it came down to trust. If they trust you, they'll take the bet, right? And so that's the journey. The first two commitments we got, for us, again, I call it a journey of faith in addition to persistence, but we're from two pension funds whose underlying trustees, they themselves had actually raised private equity, right? In fact, both of them had actually raised 2 rounds of private equity capital just to get started as a trustee. So they understood the asset class, right? Now, not just that, because of the entrepreneurial nature, these two were actually 2 of the most respected pension trustees in the country, just because of how aggressively they had grown. And so if they took the lead, right, we knew others would follow. And so we were fortunate enough to build relationships that allowed them to give us commitments. And that commitment, fortunately, allowed us to unlock commitments from, for instance, the Venture Capital Trust Fund. I think there was one additional. Yes, they were smaller in terms of their commitment. But again, that was enough for us to communicate a certain level of comfort and confidence in the market to get the others to actually start considering us. Right. So that allowed us to get to our first close. But again, I will say again, journey of faith and timing, because although we've been having conversations for some time, government's default in 2022 actually accelerated the conversations, because all of a sudden those who are on the fence were saying, okay, yeah, we're not sure whether we should do you or we should still continue to do government investments, which are pseudo risk-free. So when government defaulted, that I believe accelerated the conversation because there was pressure to diversify, right? And so these guys came on board. So we've done final close, but there's still a window. There's one investor that still has to wrap up, and so we're waiting for that. But the beauty is that we did 90, as we speak, 90% of our target solely from local investors, right? No foreign investor, no external investor. For us, that's pretty significant. And even the last investor who's supposed to come on board is also local as well. So again, for us, I think that it demonstrates that we actually can mobilize capital locally, and we are not the first. Injaro has also done it, where they were able to unlock, and we obviously were fundraising in parallel, unlock solely local capital for their second fund. So it tells us that the capital is there, and if we can bring the pension funds along, they'll do the asset class. Where are we now? We're at a point where we're deploying capital, and the goal for us is to be able to deploy this year. We started last year. This year to deploy at least 70% of asset under management and go back to the market. We're actually in the process of already registering our second fund. That takes a while, so we've started that process with the regulator, and we're hopeful that we're able to do the deployment of the 70% this year and be able to start fundraising for the next fund, hopefully end of this year or early next year. I think it's always difficult for the first few, right? And so really the pressure is on us to actually show some very good results so that it gives the local investors some comfort and confidence that this asset class, despite the fact that it has inherent risk, is worth doing, right? Because the upside is exciting. So yeah, the pressure is on us, and not just on us, but on Injaro and on Oasis and all of the others who are now also getting capital to perform. Yeah. I mean, so it's for us, it's a win-win-win-win scenario, right? Because one, what you're doing is that you're investing in local businesses, creating jobs, right? These jobs will contribute to pension funds, right? And so the pension funds actually benefit from pension contributions that come from the jobs created as a result of our investments, right? Not just that, in addition to that, if the businesses do well, obviously then that continues to grow, right? But then they also, in addition to that, get the returns on their investments as well. So it's a win-win-win scenario that we have. It's a local currency denominated fund, but at the same time we're going to go to the market, and for our next fund we're definitely going to do a USD fund, and so we're looking to deliver not just returns that are attractive in cedi terms, but when we do the conversion into hard currency, we want to make sure that it is attractive. And so what we're looking for is we do investments in we prioritize export businesses that export to Europe, that export to the US, as well as businesses that currently and Forex, right? And there are a number of businesses that are suppliers to key multinationals, whether in the FMCG sector or in the mining sector or other sectors that earn Forex, right? Those are the businesses that we're targeting for this fund as well. And the sectors we're doing agri, we're doing education, healthcare, financial services. If you look at what we were doing when we started out, the goal was to raise the equivalent of a $20 million fund. As we speak today, on a good day, it's 8 million, hovering around 7, right? Now, for us, our thesis positions us to invest in a particular type of business. These are like manufacturing businesses in the sectors that I talked about, or they are actual technology businesses in those sectors I talked about. What that means is that they require a certain quantum of capital. And unfortunately, we are in an economy where there's significant dependency on foreign raw materials, foreign inputs, what do you call it, dollar indexed equipment. Now, if 3 years ago or 4 years ago when we built our pipeline, we had a company that said, I need to build a factory and that factory is going to cost me $1 million, right? That $1 million is made up of equipment that's going to go into that factory. It's made up of consumables that they may use in production. All of that is coming out from outside of Ghana. So if they needed $1 million, that $1 million hasn't changed. And so fast forward 2025, when our currency has lost value, that business still needs $1 million. You can't say that, okay, it's a local currency fund, so you're okay. No, it doesn't work that way, right? And so for us, it's important that we are investing in businesses that can actually attract the right kind of demand to be able to pay back the money that we give them. So imagine you're investing in a business that has $1 million sunk into capex, but is selling locally. And the local currency is losing value by the day. What you've done is that you've pretty much hung a millstone around the neck of that entrepreneur and you've thrown them into the ocean. They're never going to pay you back, right? Secondly, it means that you're defaulting on your obligation to your investors. So it's important for us to find businesses that actually earn forex and are high growth businesses that can actually take this capital and be able to utilize it. And for us, our approach is we believe once we are able to stabilize a company like that, we actually end up with a network effect, because everyone in the supply chain, local supply chain, you're stabilizing their demand, right? So if you have a business that on an annual basis is doing 20% year-on-year growth, 50% year-on-year growth, what it means is that every business in their supply chain now knows that they have stable demand, because that company is going to continue to order from me, right? And so we believe that for us, it's a network effect, right? There's some who decide I want to do the low end. That's their business. We believe that we can actually bring value, a network value, by doing the kind of investments that we do. It's local currency, but what we do is that we actually we invest, but again, because we are looking to deliver not just CD returns, but to demonstrate, because if we don't demonstrate that our returns are good in hard currency, when we go to the market returns, and people are going to say, well, yes, we've seen you do a local currency fund, but your returns are not attractive in USD terms. So how do we trust that you have the track record to deliver on the USD fund? So what we're doing is that even the returns we're benchmarking against USD returns, and so we're structuring our deals in a way that allows us to be able to demonstrate that indeed we can deliver on a USD fund. Let's say we did a $50 million fund our next fund, right? I think Oasis is doing a $100 million fund. And you may think that, oh, those are huge numbers, right? Injaro may do a 50, right? But the capital gap, the SME gap in Ghana is so huge. I mean, the last report, I think I saw 5 billion, right? So that's a huge gap, right? Annually. So there's room for more vehicles like ourselves. And so for us, it's more about how do we ensure that we continue to deliver returns to allow the other funds that are coming in to have a chance, right? And so we've been part of, as I mentioned, the Ghana Venture Capital and Private Equity Association. We're actually working to build a fund manager development program to help the next generation of fund managers, right? And this is actually based on what we did not get from those international players, right? And we're saying, look, let's build something that's locally grown, right? That can give comfort not just to the pension funds, right? But also if there are other international investors that pretty much want to take the risk and come in, right, would actually see, okay, this is something that's worth looking at, right? So for us, what does it look like? It's not just for us, it's not just Mirepa's success, but it's the collective success of the industry. And 3-5 years down the line, for us, it will be really having 3, 4, 5, 6 of us that have actually done a second close and actually deploying capital. For us, Mirepa, it would be that our LPs are still happy with us and that they're willing to come on the next fund whenever it is that we decide to raise the next fund beyond the second fund. And yeah, so I think CFF, we need to have more conversations, and I'm glad that the conversations are ongoing, because it would be good at some point to be able to say, look, here's the success of this fund manager, and we can directly tie it to CFF. I think we need more work there. For me, where I see value with CFF now for me is being able to come back and share some of our experiences, but it will be good to be able to, clearly define the value that CFF brings. So